Hello friends, happy Easter. Welcome back for some Bitcoin technical analysis with me, your pal, Rocky Outcrop. And I've got the 24-hour CME chart open behind me. You might be wondering, why have you done that, Rocky? Why are you doing that? It says it's delayed. Open up that tab. It says market open above my head there, where it says the current price is 7,290. But we know that the current price is actually 6,900 and something over here on spot prices, and this doesn't seem to be quite right. Let's just check in with the CME's website and see. Oh look, Good Friday, 9th to the 13th of April is a holiday day. So I don't think those are open. That should explain why there's a difference in the price there. And that means that we can have, despite what that says, that means that we can have a wee quick look then, I suppose, and say, well, if this is a 24-hour chart, we know that if the prices are higher than that, or indeed lower than this box here, if the prices are outside of this box here that we have drawn in when they open back up, then we know that there will be a gap on the charts. So let's see, the bottom end of that box comes in at 7,070, the top end of that box is 7,435. So if you're looking at a sort of $100 premium, or a $50 premium, it depends what it would be actually at the time, with this old contango chat. Just real quick here, there's contango and backwardation are the two words that they use. When a market's in contango, the forward price of a futures contract is higher than the spot price. So that's a great word, I just think. Right, anyway, it takes two to contango. So the two of those are, of course, the CMEs here and the spot prices that we normally look at. So so we know that if the market has that sort of, still is in a sort of contango phase, then maybe it would be somewhere between a $50, $100 premium, something like that. Whatever. So if the markets open back up at 6,900 or so, then we might actually avoid a gap on the CME chart here, or if the prices open up above 7,400, then you might see a gap on the top side come back around again on Monday. So I suppose we can do our sort of analysis of that a little bit early instead of looking at it on Saturday as we would normally do. So that's handy, I suppose, to know. So where are we currently, and how does all that shape up then together? And let's see if I can get if I just put those Fibonacci's back on, so you can see here we've got the two of them, and we've been looking at that for a wee while, and we can see that we've come to the 382 line here. Having come fairly close, but not quite the full way up to that 50% retrace at 7,600. Prices did make up as far as 7,500. We were close there, and then we've come back down to this 382 here. In terms of the 50% retracement, that we did actually make it above, which is on the wick to wick Fibonacci retracement here at 7,200. Well, we went up above that, back down below 7,200, and we're down here at the 6,000, come down to 6,850 again, which is that level that we've known about and we've had in mind for quite a while. So that we also find the 24-hour chart shows us the 21 EMA is happily sat in there just now. So we need to then be looking and saying, well, what is the question here? I mean, we spoke about all this in the run up to it happening. I suppose yesterday none of this was a surprise. In fact, just kind of like opening my eyes up and seeing what's actually on the chart here. We can get rid of this now. We don't need it. So we've done that full measured move off of that. That's good crack. Like, comment, subscribe, by the way. If you subscribe and you get the daily videos and all that jazz, hit that bell and everything else, and hit like if you saw if you watched yesterday's video and you saw this whole thing pan out like this, is kind of that's fun. Right, anyway, yeah, so we're below this 382, and I pointed out in the past that if we go down below the 382, of course, this wick to wick one overall here, then you'd have made your full 236 retracement from if this were to be the highs. So let's just put that in and speculate again off the back of that just real quick. We were speculating based on the concept of if you hit 50% and go to 382, that's equivalent of a 236 retracement. If I'm talking past your head here, then I'm sorry about that, but subscribers know because they watched the video with me recently talking about this. So anyway, yeah, so up there, if we're to have this then as the top, then where have we come and where would we be looking for is the next crucial area. Let's just say in 6,600, you'd like to see the prices stay above that. If you're just looking wick to wick, if you look body to body, instead on this here, then you're looking for this, the crucial price being 6,787, and I suppose we kind of can feel that anyway. I think that's the we know that ourselves, because we can see here with 6,700 being sort of the previous kind of low area. You know, you don't want to be going down below here, obviously. And the bigger term time frame, of course, then what we'd like to do from time to time is to keep an eye out for any sort of patterns which may be evolving on the market at any time. And when you're looking at a sort of upward sort of trend that we've had for the last wee while, then maybe something to take into mind would be if we could have some sort of head and shoulders type shapes coming up on the market, and certainly in terms of psychology as we approach certain areas like these 382 Fibonacci retracements and the 50% retracements, and how the price actually evolves around those areas, and whether or not we see uptakes in the volume and then pick up in the actual, you know, demand and everything else at those points there, if we just get rejected from them, etc., etc. So you know, that's what, so if the price is, what I mean by that sort of, I suppose, is if we do come down to this 382 here, then we'll have to be looking back up and really be wanting to get back above the 50% here yet again, to avoid any sort of feeling of setting in a right hand shoulder, and then, you know, looking towards the next wee while, reversing this overall upward trend. You know, so that's the sort of, to the sort of, you know, down the line here as we think about things, how they could all pan out. But generally speaking, what did we expect the prices to come? Perhaps, do not expect is the wrong word, would be around about that 6850 level, as we've been keeping our eye out on it for the longest time now, since all the way back over here, I suppose, on the 2nd of April. And we've got this red dotted line coming down here. You might be wondering what is that, as it joins up with this green smooth line, and they're both 50 moving averages. That's the 50 simple there, and that's the 55 exponential, the green one, the 55 exponential. They're both there where the prices were, and we were looking at that in the context of how there was a death cross over here on the 50 and the 200. Quite often after seeing these things happen, you go up and you test the moving averages themselves. So you'll remember back over here with the golden cross, people were extremely bullish about that. People maybe then became extremely bearish when they saw this happen. And, you know, there's actually way more dynamics involved than just simply sort of just, you know, pointing and clicking like that. And there almost always is. In fact, just if we're looking off this alone, you know, just to point that out, I suppose, while we have it on the screen, if you were to be thinking about these here, you'd think that this cross here was actually the death cross, and this was actually maybe a golden cross, you know, the way that these are working. But of course, this red dotted line is the 50, and that white dotted line is the 200, and that was a golden cross as the prices dropped down. You know, so sort of as a snapshot of the market, this would be a good sort of the exception proves the rule type thing, perhaps, for you in the future to look back upon. But, you know, and the same could be said over here, whatever, with these, with just as drawing a contrast between the different, not the same, the opposite could be said with drawing a contrast between how they're sort of supposed to work, these crosses, whatever, who cares. We knew that the prices could potentially be finding a lot of profit taking happening in and around this horizontal blue line, and that's happened. So what we have to look for now, really, what we need to see happen overall, is we want to see the prices come back above the 6950 382 Fibonacci area here, and open and close then dailies before up there and start moving back up towards, like we've seen, and continuing this overall trend towards the upside. But we still have to be aware, look, we've got diminishing volume here, we've got the RSI has only just made it up into above the neutral lines, back down here testing off the neutral line. We've got the stochastics having twisted back around again, you know, and the question becomes, like, are we going to get a period like we had here from, say, January till Valentine's Day, where we went up into this overbought territory, then came back down and up and down in this territory, and actually set in an upward trend, as we can, you know, as we know happened up here in the price action? Could we see that, or is it going to be more like, for instance, just you know, the textbook stuff that people talk about, instead of looking up examples of it, where, you know, you go into this overbought and then you come down, and then that's your trend changing, and could we see this for the next wee while operate right down towards the downside? You know, that's the question right now, I suppose, and it starts with the checkpoints on that there are in here at this sort of this area here. If we can come back down here and find some sort of turnaround point yet again here, move towards the upside, then great. You know, we could be looking towards our upside targets, and we have got an upside trend here on this chunk of time, which isn't divergent overall in terms of this of the oscillators down below, apart from over here on the tail end of it on the MACD. You know, so there's that. But and if that were the case, then you could then look back towards this CME chart in the future and say there's this gap over here that we had on the 9th of March to maybe exploit at some point, you know, between the 8,250, 9,000 price points over there. But yeah, so that's basically all we're really looking at the minute, and things have played out kind of how we thought they might. And that's, and just I suppose as then the sort of takeaway is in this is to be careful in around this area. We did say it was looking a bit overextended, and just in general you're getting big moves, like, you know, this difference here, that's another 5.5%, and 5.5% is like really big in terms of being able to take profit off them and everything. Try and just not be too greedy as a trader and experience any sort of FOMO either side of these things. And of course, you know, you've probably saw in YouTube land over the last wee while people screaming about $8,000, and now of course you're going to see people screaming about $6,450 and whatever, or actually no, 5,000. I don't know. Let's try and sort of keep our head screwed on and not get any too much sort of FOMO or anything else. So we had some little bits of divergence that we were looking at here on the 4-hour time frame. Was it on Bitcoin that we were looking at that between these high? No, actually, what? Not really. Maybe I'm confusing this with another coin. Whatever, doesn't really matter in terms of the lower time frames. We've come down here, and overall we have a trend here. So this is the high, this is the high, this is the next high, these are the lows here. This high here isn't divergent to the past. We've had the tail off in the price and down here, but we're lower than our previous lows. Okay, so if the prices did turn around and continue to go up, you'd have a touch of hidden bullish divergence over here on the RSI, which is a sort of good thing, I suppose, for the strength of any upward movement. And the same could be said with the stochastics as well. But you do actually have this crossover here on the trend indicator that we use, DMI, showing that there's an upward strength here and a downward positioning of the DMI plus and minus. You know, sort of saying that this could be, you know, this could be happening. And we're below the 50 simple here on the 4-hour time frame, looking down. And you know, you could easily test the 200, at which point you'd be putting in a lower low. This wouldn't be divergent anymore in terms of bullish divergence. You know, you'd be instead looking towards this just being continuation and convergence. So we'll have to keep an eye out for how things interact around these different sort of price points. Of course, that being around that 6,450 area. If we do go down towards there, then we'll have to then sort of, you know, make a fresh assessment of things. Right now, though, the prices are in this area where we thought the prices could come to, and therefore, am I going to say this is a no trade zone or any of that sort of thing? Not necessarily, but just, you know, it could go either way really. And to manage your trades, be fairly tight on yourself, I suppose. And you can look towards, I'm not a financial advisor, none of this financial advice, look towards these sort of two upper and down areas here, just in terms of sort of being tight on yourself, risk management lines, I suppose, at that sort of 7,000 and 6,850, where we currently see this 55 and the 144 exponential moving averages operating. So yes, thank you so much for tuning in. Thank you very much for liking and subscribing and taking part in this whole journey we are doing together as our YouTube channel, and that's fantastic. 386, I think, something like that, subscribers. That's absolutely amazing. I'm like, my socks are well and truly blowing off, believe me, and I'm amazed. So that's fantastic, and I can't believe that we're looking at sort of 400 soon, and that sort of, I just can't believe it. So I really appreciate it. I'm really glad that you guys are and ladies are enjoying these videos and this content. So thank you so much for tuning in yet again, and I'll see you tomorrow with more daily crypto technical analysis. Yes, thanks. See ya.